Good afternoon / good evening to everyone who's joining us today. You see our attendee list is filling up, and we're so happy that you were all able to join us today for part one of financial considerations for Bronx small businesses. My name is Sarah Benizio. I work with the Bronx Chamber of Commerce. I'm joined by my colleague, Francisco Aguilar, who is our membership manager. And we're delighted that you are all able to join us today for the first part of our two-part series. The next one will be this Thursday, December 16th, and we'll share a little more info about that after the presentations today. But I wanted to say hello and welcome. Thank you all for joining us, and to introduce our co-hosts at BOEDC, the Bronx Overall Economic Development Corporation. We have Mr. Michael Nixon. BOEDC was actually the generous sponsor for today's event. And we're thrilled to be able to bring this to you because we've heard from so many of our Bronx small businesses that they really want more financial webinar content. So you asked, we delivered, and we're glad to be able to bring this to you today. Francisco, if you'd like to do a quick greeting, say hello, and then pass it along to Mr. Nixon.
Will do. Thank you, Sarah. Hi, everyone. My name is Francisco, and I'm with the Bronx Chamber of Commerce, working as membership manager. I'm relatively new to this role. Previously, I was a small business recovery specialist within the NYC Small Business Resource Network. That's a program that we have here at the Chamber to assist small businesses in almost any need that you may have. It may sound a little crazy, but we do help in a lot of different ways, all completely for free. We assist with financing, technology improvements, marketing help, legal assistance as well. So if you're looking for assistance with that, I advise you to sign up with our program. You can find that link at smallbiz.nyc, or you can give us a call at the Chamber anytime, and then the specialists will be happy to help. And I'm going to pass it over to our colleague, Michael Nixon with BOEDC, and thank you so much for partnering with us to put this little series together.
Okay, thank you, Francisco. Thank you, Sarah. My name is Michael Nixon. I'm with the Bronx Overall Economic Development Corporation. Bronx Overall Economic Development Corporation is a 501c3 nonprofit organization focused on economic development in the Bronx. And we also consult to the Bronx Borough President's Office on economic development issues. So in that role, we lend money to Bronx-based businesses. We help businesses cut through governmental red tape. We assist businesses if they're looking for real estate to locate within the Bronx. Also within our office, we have a satellite office of the New York State Department of Labor. If a business is looking for staff, they can provide information as to the number of people they're looking for, levels of education, responsibilities, and our organization through can provide that information to the New York State Department of Labor to assist businesses in that process. So again, our primary focus is economic development throughout the entire borough of the Bronx. It's our pleasure to help sponsor this series of webinars, this one being the first, and the second one taking place on Thursday, December 16th. I think both of those seminars or webinars should be very, very helpful to businesses. Today's webinar on understanding cash flow, I think, is very, very critical, having provided technical assistance to many, many businesses over the years. Understanding cash flow is so important. And I remember years ago someone saying that there are many businesses that go out of business even because they are profitable, because they run out of cash. And for the startup business owner, that might seem contradictory, but I believe that in listening to this webinar, you'll get a better understanding of the importance of managing cash flow for your business. So without further adu, again, on behalf of BOEDC, we're very pleased to help sponsor these webinars, and I'll turn it back over to the New Bronx Chamber of Commerce and then TD Bank. Thank you.
Thank you so much, Michael. I am thrilled to introduce our representatives from TD Bank this evening, who will be giving us a wonderful presentation about cash flow, as Michael noted. We have Craig Radigan, we have Henry Rivas, and we have Richard Dzilowicz. I hope I did not butcher that too badly, Richard. We're very excited to hear from them. So without further ado, I'm going to pass that along to Craig, who will also be sharing his screen to walk us through his presentation.
Good evening, everyone. Thank you for joining. Bear with me 1 second so I can pull up the screen so you can. Sorry, it was right here and now I'm having a little difficulty finding it. Okay.
If you're like me and you have about 46
Okay, so
tabs open at any one time, I can relate.
Okay, so this is the cash conversion cycle. This is a diagram that the Small Business Administration provides. So I just want to use this as a follow along as I discuss. So in order to obtain loans and lines of credit to help your business grow, you'll need cash flow to support the loans and repay them. So oftentimes business owners will be looking at the cash conversion cycle to show their cash flow and their cash needs. So the cash conversion cycle shows how business dollars are invested in raw materials, resources, and other inputs. Those raw materials can be converted into products that are sold and they generate payments or cash. If you have a short cash conversion cycle, you can quickly sell inventory or turn it back into cash, which puts money back into your cash flow system in a relatively short period of time. So think of retail with that example, where you get the goods in, you sell them, you have a point of sale, you get the cash right away, and then you can reinvest. The longer your cash flow cycle, well, if you have a longer cash flow cycle, you will not be able to use the money while your inventory is unsold and sitting on your shelves. Money will not be flowing back into the system. The longer your cash conversion cycle, the greater the need for working capital or a line of credit would be. And for a line of credit, for anyone who doesn't know, it's a business loan. It's a revolving loan, which means it can be drawn on and repaid as you go. And oftentimes the line of credit, think of it as almost like a large credit card with lower interest rate. And that line of credit is used to cover that timing difference for the cash flow cycle, where you may have to pay suppliers before you're getting paid by your customers. So although you may not have the cash, the physical cash on hand, there should be sufficient profits that you're generating to support any sort of loan request that you have. Although you might have to wait for those profits to be realized due to the cash flow cycle. And oftentimes, a growing company will run into cash flow issues, actual cash issues, because as they grow, they need to buy more products from their suppliers, and that cash flow cycle takes a lot longer. So terms provided by suppliers and terms you provide to your customers can vary and impact your cash flow cycle. Typically, a lot of suppliers give 30-day terms on what they're charging you, and then you may often also have those 30-day charges. So if you both have that, then you're going to have to pay your suppliers before you get paid. Sometimes you have situations where you need to pay cash on delivery. So when you have get those goods in, you have to pay your suppliers immediately, which means you have to have the cash on hand to do so. And then you have to wait when you sell the product in order to get that cash back. So talking about loans for a second here, when financial institutions are reviewing your loan request, they will look at your historical performance, what you've done in the past, as almost a way of showing what you'll be able to afford in the future. That can be done oftentimes by reviewing tax returns, bank statements. And one of the figures that they look at is called Ebitda. You might have heard the term What EBITDA means is it stands for earnings or profits before interest expense, taxes, depreciation, and amortization. So this is what your earnings, your profits are, your bottom line, what you're paying your taxes on, any sort of interest expense that you paid towards the loan, because without that loan, that would be available. Taxes, because your earnings can vary. So if you're paying your taxes, if you have less earnings, you pay less taxes. So that's a variable that we add back. And then depreciation and amortization, if you don't know, those are non-cash charges that you can write off, and they are true write-offs, but they are actual available for cash purposes. So this is what the cash that's available to repay debt. And that is why it's an important number for financial institutions. And now, hopefully everyone can see this. This is a cash flow diagram also provided by the SBA. So this kind of gives a little bit of life as to what the cash flow cycle is. So it shows a few key elements. It's a representation of how cash moves through the system, and the valves in here are different instances where business owners actually have control. So they are variables, and each business can change that depending on what they do and how they operate. So they are decision points. Your decisions as a business owner can impact the cash flow and increase or decrease your probability of success. Some of these valves are open all the time, like you have to pay taxes, you may have to take on debt. They're a constant usage of your cash and what happens to your bottom line. When you start a business, money flows into the system, whether it's by you putting money in through equity, or you borrowing money, whether it's through bank debt, or maybe you have family, friends that have helped support that are expecting to be paid back. So again, going back to the valves, some of these valves are partially open, like sales, general and administrative expenses. You'll always spend money here. How much is up to you? As you spend available cash, the balance in the middle tank, your available cash right here, that will vary. So you have different things to spend your money on. One of it is inventory. You spend money on raw materials, on labor, on direct costs to produce and sell your product. So without these, you wouldn't have a product to sell. You couldn't actually operate your business. So if you decide to spend a lot on inventory, you're deciding to tie up your money until you sell that inventory and turn it into cash, like we discussed in the cash flow cycle. So you have a limited amount of cash to spend, and this is how you spend it can impact how your business works. Fixed assets is another way you can spend your money. Fixed assets include things like buildings or vehicles, equipment, computers, technology, trucks, leasehold improvements to upgrade your space. If you purchase an expensive fixed asset, it ties up your available cash. And typically these are long-term assets. So it ties it up for a longer period of time. And you may not have that immediate change back, that it turns it into profits, it turns it into sales, it turns it into cash. So whenever you're investing into fixed assets, realize that it becomes a long-term investment. Then there's also the sales pump here. And that sales pump right up here as part of it in the top left corner. And that is what kind of keeps it back into the system, that you have to keep your sales going in order to keep generating the business. Accounts receivable. So you may make a sale, but the cash, it doesn't turn into cash until you collect it. Ultimately, you want to convert your accounts receivable into cash, so it flows into the center tank and becomes available again. Now, again, accounts receivable is if you're giving terms to your customers. So you make a sale, and it's not a point of contact sale where as soon as you sell that product, you're getting that cash in. This is more that you're selling to a customer, oftentimes business to business, and you're giving them terms in order to pay you, whether it's 30 days or 45, it can vary. And that's what we talked about earlier, where those terms that you provide can impact where your cash is. Accounts payable on the opposite end. In the center tank, accounts payable is represented by bricks. This money is owed to vendors and suppliers who extend credit to you. For example, you receive a product or service, but you don't have to pay for it yet. you still have use of that money. So you haven't spent the cash, even though you have the supply. The bricks elevate the water. Instead of having to pay for the product or service, you can use that money for other things like marketing or paying another bill. Ultimately, you'll have to pay that accounts payable. So it does become a balancing act between your accounts payable and accounts receivable, and that can be a challenge. You want customers to pay you as quickly as possible, which brings cash in, but your suppliers will oftentimes want their cash as soon as possible, which is a cash out. So keep in mind, your vendors are trying to do the same thing that you're doing. They'll want to be paid quickly, and slow payments may often interrupt relationships. Ultimately, you want to have to be generating profits, and to generate profits gives you excess cash flow and gives you a profitable operation, and that way you'll be able to pull that money out via payroll or distribution, depending on how your organization is set up. And just a little more insight, even though it's not really on the chart here, is that the bank or any sort of, not just bank, but any sort of debt can be inputted in order to kind of cover those expenses, going back to the line of credit talked about earlier. Now, in order to prepare for any sort of financing, whether it's a bank or smaller microfinancing, oftentimes they'll need to see some sort of historical performance, such as tax returns, as well as year-to-date performance. So if you have an internal accounting system, to keep that up to date as well, to show how your year is going, especially if you're in growth mode, because you need that money before you show that historical profits to support it. So that interim information, that year-to-date information is important. So it is always great to keep your books updated. And also bank statements are good as well, to show that money's flowing in and out as we expect it to be. And your accounting information will often have accounts receivable and accounts payable aging reports. So that shows how long it's taking for you to collect your money as well as pay your vendors. And if you're looking for a line of credit, that is important as well, because we need to see that accounts receivable, which tends to be the collateral for it, and that accounts payable, because that's the usage for it, that you want to pay your suppliers. So that is a quick overview of the cash flow cycle and the cash flow diagram. And will be available for any questions. If there aren't any right now, I'm going to turn it over to Henry for his presentation.
Thank you, Craig. I'm going to put the spotlight on Henry.
Great. So just reinforcing what Craig just explained in related to cash flow. I also gonna provide some briefly presentation as well in reference to merchant service and how that could potentially also help the cash flow of your businesses as well. So let me see if I could get to share my screen. Give me 1 second. I think it's this one. Let me know when. No, I don't think that was the one that I wanted to show. I think it's okay. Let me go back. Let me see this one. Just let me know if you guys see my screen. It says over here that is sharing presentation, but I'm just waiting for you to confirm it that you are seeing what I'm seeing here.
Not just yet. We still just see your lovely face.
Okay, so give me 1 second. Let me just try it again. I don't know why it's not happening.
Isn't Zoom fun? After these 20 months, there's always fun little tricks that always get us sometimes.
I don't know why it's not sharing. I see it on my end, but I don't see it on your end. Share. I see. Oh, anybody's
Okay.
sharing.
You could feel free to email it to
Yes.
Francisco. Maybe email it to
Yeah,
Francisco. see
sure.
if
Let
he has
me
a little
let me
bit of-
just do that very quick. Yes, because I don't know what's going on. Let's see here.
While we do that, put it out to our audience. If anybody had any questions from Craig's presentation that wanted to jump in, I didn't see anything in the chat or the Q&A, but we'd love to invite you to ask any questions that may have come up during the first part of the presentation when Craig was on. So I'll put that out there right now. If you'd like, you can just pop your question right into the chat or into the Q&A, and I'll read it off to our presenters.
Francisco, just let me know if you receive it for some reason.
I heard the whoosh, so I think it went
Yeah.
through.
I'll
Hi,
let you know when I
Jose
get the email.
Manuel de Jesus of Bronx SBDC at Lehman College just popped into the chat. Hello, thank you for joining us.
Got it? It's a PowerPoint presentation.
Yeah, not yet. I'm still waiting.
Okay.
Hi, everyone. This is Rich Dzilowitz. I'll just add a couple of comments while we're waiting. So we're available anytime. So obviously, if you have questions, while we're conducting this call, we'd be happy to answer. But if not, if you want to follow up with us after the call, that's fine as well. You can either email the chamber or email us directly. We'll share our contact information at the end of the call.
Perfect. Thank you, Rich. I just saw a message from Tanisha Simpson. Thank you, Tanisha. Please ask Craig to restate the concept of generating profit, which can be used for payroll, etc.
Okay, so I guess the separation that we were trying to say here is, and I guess it's a concept that's almost seems counterintuitive, but there's a difference between having positive cash and having profits. So one of the things we're talking about was profits would be you have sales and then you have all these other expenses. And then after those expenses, your sales minus your expenses, you have profit. And that is how, that's what you pay taxes on and everything else. So that's a pretty simple, straightforward concept. The cash flow cycle is where it works a little different. So what was said was that if your cash in, so even if you're making money on paper and your sales minus your expenses is positive, so you have profits, it doesn't mean that you're going to actually have cash in hand. And the reason for that is your cash flow cycle. So if you have more money out to your suppliers because you need more of widgets, you need to buy more supplies in order to keep selling, then you're going to have less cash on hand. And one of the things that was said was when you're not paying your suppliers, so when your accounts payable increases, that's a liability, you're going to have to pay that. But when you're not paying that right away, that actually increases your cash because you're selling the product, you're collecting some of that cash. And now you actually do have cash on hand. So it's more, what was said was more of a balance of trying to manage your accounts payable, trying not to manage your suppliers where you can actually take some of that cash in, and maybe instead of paying your supplier as soon as that cash comes in, you can invest into something else, whether that is a fixed asset, whether that is another person on payroll, because now you have that extra cash to pay them. Now, eventually, the supplier will need to be paid. And as long as you're making profits, eventually that'll catch up. And if you have a business loan, sometimes that can cover that difference, but that's not always the case. And that's not always the way you want to go. But it's more about your cash flow cycle is different than profits. And that was really what we wanted to get across, because if you just look at your bottom line, you just look at your profit, it doesn't mean that you're going to have the cash to pay for your suppliers, to pay for your payroll. You might have cash shortages at times because it is a timing difference. I hope that makes sense and that clears that up.
Okay, so great. So coming back, hopefully Francisco was able to make it happen. Thank you, Francisco.
We do. We see the first slide. What is Merchant Solutions?
Gotcha. So I'm just going to be really simple in reference to what merchant service is and how this, as I said and indicate before, could also help with the cash flow of your businesses and generate perhaps more revenue on the same time. So basically, a lot of people sometimes they don't get familiar with the expression merchant services or merchant solutions in this case. So merchant solution, it's just the service that we provide to make it easy for business owners and businesses at the same time to be able to accept payments not only by cash, but also by smart payments, also including credit cards and debit card. So when I say smart payment, that indicates Apple Pay, Google Pay, Android Pay, also contactless payment. So that is when you see a client that is basically touching the swiping machine with the card, not literally swiping or dipping it inside of the equipment. So that is basically what merchant service is. And with the merchant service, we provide, by all means, this solution to a different type of businesses that are retail. So like for example, in store, in the office, business that are online or home based. So people who have like maybe a website that they sell clothing, or they sell accessories, or health products, or hair salon, or anything that is basically e-commerce. We provide also merchant service for that. We also provide merchant service for mobile or on-the-go businesses like food trucks, people who are on the streets, like selling their goods. We also provide that flexibility. I have also some fun fact that I want to make sure that everybody gets. So 40% of Americans prefer to pay with credit cards, 35% with debit cards, and only 11% with cash. So what that tells us, what that means is that if you have a business and the business only, you as a business owner, you only accept payments only as cash, you are basically losing money on one side, and also you are limiting your clientele, because there are people like me, for example, that I don't literally carry cash with me. I basically have my wallet, my cards, and basically everywhere that I go, I pay with either my credit cards or debit card. Nowadays, also because of the pandemic, there are a lot of people and a lot of business owners as well that are looking a way to get paid without or with not much contact with the client, basically. So, just to the fact or the danger to be in contact with somebody who could be potentially infected with the virus. So this basically gives us the opportunity to basically expand the way of solution, or on the way of options that we could provide to our clients to pay us as business owners, and basically increment the revenue and also the sales of your business. So now, if Francisco, if you could go to the next slide. So now the question will be now from you. So, okay, so we have now merchant service, but what is in for me? So what do I get for me trust my business to TD Bank in reference to merchant service? Well, you will have plenty of benefits. I will mention a few of them here and there, but this is one of the most important one. So with the merchant service relationship, you could get one of the top business account that we provide to our business clients at no cost, meaning you will get the TD Business Premier Checking Account at no additional cost, no minimum balance required into that relationship, just because you have an active merchant service with us. So what that means is right from the get-go, you are saving roughly around $30 on the monthly basis, because that is the monthly fee for this type of business, just by having merchant service with us. So one of the key factors or benefits that this type of business account provide to our business clients is that you could, as it indicates there, you could upgrade to the Premier Business Checking Account for free. So there's no cost to that. No hassle to changing the account number. So there's no need to change your account number. The account number is still the same. You also be able to add 2 additional business simple checking accounts. So bottom line, what this entails you is that you could have up to 3 business checking account on us just by having merchant service with TD Bank. Now, one of the other benefit of those 2 additional account, if it's needed, is also to help you to be more organized with your business, because most of the time people want to have an account to receive all the payments coming in, one account to basically put on side money to pay quarterly or monthly biannual taxes for the business, or you may want to also have another account where you may want to keep money for the expenses of the business, paying bills and all that stuff. So by you having 3 business account, knowing that it's all free, you basically could be also potentially more organized with that. This account also will provide the benefit to be able to deposit up to $30,000 in cash deposits. If you also, besides obtaining merchant service, you also have a type of business also that manage a lot of cash. So you will be able to deposit up to $30,000 in cash deposit per statement cycle without any additional cost to you. And also TD Bank or TD fees waived for money orders, official checks, and non-TD ATMs. So all these are part of the benefits that you will get with this type of business account as at the time that you basically roll your business with or merchant services. Now, if
Henry, can I ask a quick question?
Sure.
This is Sarah from the Bronx Chamber. So, you know, we have a lot of micro small businesses who have recently either become members of the Bronx Chamber or whom we've serviced through the Small Business Resource Network.
Sure.
This, can you talk a little bit, you know, it says upgrading from, if you're quote unquote a civilian or an individual TD Bank customer as a private citizen, right? And if you're upgrading your bank account, this is at what point in your business development cycle, like as far as like startups, or how does this tie in with like an EIN number?
Oh, well, yeah, so it's a great question. So this relationship, when I'm talking about the TD Business Premier Checking Account, it's a business relationship. It's not like a personal relationship. So in order for you to get merchant service from TD Bank, you will need to have a business relationship, either at TD Bank or any other location. However, at the time that you open the business relationship with us, that will come free based on the merchant service relationship that you're about to open. Now, in reference of what is the part of the cash flow that this will represent, is most likely in the beginning, because you are basically establishing your banking relationship with TD Bank in order to also dip your relationship with by adding merchant services. Now, on this, I don't know if that answered your question.
I was just, I'm just thinking if I put myself into the
Mhm.
shoes of the demographics of who we're currently hearing most from through our business conversations, right? Again, through either, chamber membership or through the Small Business Resource Network. And I'm just thinking that a lot of folks are at either, the beginning stages of their business and, how that works. Cause I saw the, upgrading concept and just, I
Yeah.
know that there's a lot of pain points in terms of when you're in the startup phase and you're sort of transitioning from I had an idea and I started a business to actually getting into a legal business structure,
Yeah.
and all of the changes that comes along with that, and including having a separate bank account and
Yeah.
IRS considerations, which we're definitely not getting into today. But
Yeah.
I was just wondering how this all where you saw this fitting in at which point in that stage.
Yeah, so I mean, if I'm understanding it right, when we provide merchant services to our business client, this is no like something difficult to perhaps obtain or to proceed with. If you have like perhaps one of your members of the chamber has like a sole prop business. Of course, the business has to be legal. It could be a sole prop. It could be a LLC, it could be an incorporation. So it just basically you establishing your business relationship. At the time that you get the business relationship, if you are considered at the same time to obtain merchant service, you get the upgraded benefit to get the business premier checking account on us just because of it. Then when we go to the process of the merchant service, what we do is basically we compose an agreement. I have a conversation with the person in reference of what are the costs related to the service, because the costs are customized based on the business nature. And then if the client provide the verbal consent that they would like to proceed, it's just as simple as me composing the agreement, send it over via email to the client, explain or review that agreement with the client, just to make sure that everything that I said verbally is in black and white. We sign the agreement and everything goes to a review process that it will take from 24 to 72 business hours. And from there, it just basically get enrolled with the merchant service. It's nothing deeper than that. It just basically you getting the way of be able to accept payments also via the recurrent credit card. Sometimes what people say is that sometimes that merchant service is too expensive. So sometimes when people get to say, most likely this type of expression is because they didn't have a really deep review of what merchant service or how merchant service could literally benefit their businesses in reference to proceed to accepting payments via the recurrent credit card and also through smart payment.
We just had another question coming in. Thank you for that. If you wouldn't mind, one of our attendees asked, she said, I have a web presence, but I'm having trouble getting online sales. If there is a month where there are no sales, are you penalized?
That is a great question. So we are looking forward to, we work with businesses that just generate at least $12,000 yearly in transactions. So if you as business owner, you think that you are there and you think that you could at least manage $1,000 in transactions monthly, we could provide merchant service, and merchant service will be a good fit. Now, otherwise, if the $1,000 at least in transaction is not there, then there will be, or it could be a separate fee for that specific month that you didn't do at least $1,000 in transactions. And that fee will be around $25 for that specific month.
Thank you. I saw another question come in. It was not very specific from Anthony. It just says merchant service ? So Anthony, if you could expand upon that a little bit more, I will relay to the panelists. Please go ahead, Henry, please. Thank you.
So now if Francisco could go to the next slide. So over here, it shows how merchant service could contribute with the growth of your business and also the growth of your balances into your business account. So, and this is a study that happened all across the nation, not only at TD Bank, but all across all banks in United States. So people who only have a business account, standalone business account, the average balance, even for a small business, it's about $23,000 as an average balance. Now, when they include merchant services, their revenue or their balances, basically, not revenue, their balances increase substantially to $88,825, most likely around there. And the reason why is because when you get merchant service with TD Bank, we guarantee 24 business hours as the funding time frame. So this also will help you to basically prevent any overdraft that you may that you may have into your account, any checks that you gave out and it came in the wrong time, somebody deposited and it came into the wrong time and you don't have any way to back that negative balance off. Merchant services are really a plus on this because we guarantee 24 business hours funding time frame. So you know that all the transactions that you did the day prior will be deposited into your business account the following day. So you don't even have to be rushing to go to the bank to make deposits to cover any specific expense that may put you on an overdraft status for your account. Also, going back with what Greg also indicates, by also adding lending to the merchant service account and the DDA relationship, which is your business relationship, you also increase basically up to 6 times the amount of $23,000 that you eventually will have if you only keep a standalone business relationship by itself. And it will increase to $149,541 because lending, merchant service, and the DDA will give you flexibility in reference to cash flow and how you could basically be able to function on a way that it could be at the standards of your business. So if you see on the right side of the slide, it says 19% of merchants have a loan with an average loan balance of $312,000. So 19% of people who has merchant relationship, when they get lending products, they most likely get an average around $312,000 as an average on lending products. 8% of the merchants have a small business credit card with 35% higher balances and 43% higher revenue than non-merchant card holders. So also adding perhaps a business credit card could also provide you with more flexibility with cash flow because you could also use credit and lending to perhaps pay for any equipment that you're looking to pay or buy or to expand your business if it's something that you're looking to do. So 85% of the loan accounts and 73% of the credit cards accounts were open after the merchant service account, meaning if a client just opened the DDA, the business relationship, and they add the merchant service account, they add or decide to go with lending right after that, and 85% goes with a loan, and 73% of the loan and 73% of the credit cards that were obtained were after the merchant service relationship was established, which is a good plus, a huge plus for your business relationship. Now, if Francisco could go to the next slide. So now we do have right now a promotion for anybody who wants to join or a business relationship and also at the same time get merchant service with us. So right now we are giving 1% cash back during your first 3 months, and that is capped at $300. We know transaction threshold required. So what that means is that we are giving you 1% back for all the transaction that you processed during the first 3 months of your merchant service relationship. no matter the amount that you process on the first 3 months, you will still get 1% cash back for all those transactions that you do on your first 90 days. Now, if you process $200 per se, in the first 6 months, you will get an additional $200. So if you put it all together, you could potentially get up to $500 on us just by having merchant service with us. So right now, as far as I know, no one else right now has merchant service offers right now that they are promoting at the moment in order, or this aggressive in order to basically provide to their clients. So, and the benefit also keep going. So with, as I said before, the merchant service also provide you with cash flow moving quickly with next day business day deposits. So once again, we guarantee 24 business hours as the funding time frame for all the transactions that you do on the daily basis. And then by opening a TD Business Premier checking account, your monthly fee will be waived. And basically getting started is pretty easy. Just basically getting in contact with us, with me, if you would like, directly. And basically, I could basically have a brief conversation with you to understand more in specific your business, and basically explain you a little bit more about how we could basically make that happen. And you could also get the benefit of getting the offer that we are offering right now for merchant services. Any question?
Thank you so much, Henry. This is great. I will ask you and everybody else, please, to also put your contact information into the chat and just make sure that it goes to everyone so that all of our guests can see today and be able to take advantage of this great promotion. I did want to mention that we have Jose from SBDC, the Small Business Development Center at Lehman College, who I just hit promote to panelist so that he could give us a welcome. And thank you, Craig and Henry and Rich. And I wanted to allow Jose the opportunity to talk about some of the great things that are on offer by SBDC, which is another one of our Bronx Chamber and BOEDC partners here in the Bronx, assisting small businesses. Thanks for joining us, Jose.
My pleasure. Thank you so much, Sarah. Like Sarah said, I'm a advisor at the Small Business Development Center at Lehman College. And we actually prepare people to be ready when they come to Henry and Craig. We get their things like their projections ready. We help them with the general loan readiness to help complete the package that you guys are building to lend them. I always like to tell my clients that, you know, if you have $1.35 to $1.50 cash flow, for every dollar you want to borrow from a banker, you're okay. That will work because the banker can see where you're going to repay the loan from. And there are a couple of things that a banker needs to see when he or she speaks to you and considers you for a loan. That is the willingness to repay, and of course the ability to repay. And the ability to repay ties directly into this cash flow conversation. So the SBDC, we are open, and as long as you want to send somebody over to have us help them, you're more than welcome to, from the chamber or from any of your organizations. We provide all kinds of resources to entrepreneurs, but especially loan packaging and preparation.
Great. Thank you so much.
My
Glad
pleasure.
you could join us today.
Oh, and the services are free, by the way.
The first services are free. Way to bury the lead. Excellent. We do have a question that came in that I think is going to be sort of a hot topic going forward. Devin Johnson just asked, I just got my cannabis business account closed by BOA. does TD Bank accept cannabis-related business accounts? I think we're going to be hearing things like that a lot more going forward, so we might as well get it out there now, right? The winds
Yeah.
of
Who
change
is
are
that question
blowing.
for, by the way? Who is that for? Is that for me at the SBDC or is
I
that
believe that's for
bankers?
TD Bank.
Okay.
Yeah, well, I mean, maybe you might have an answer, Jose, for them, because right now banks are restricted. So it's not surprising that the account was closed at Bank of America. They might have let it through, and then when they did their their searches, their know your customer activities, and saw the business, unfortunately, because it's not federally chartered yet, the banks are restricted from opening up accounts. There is talks about that changing as the regulations change, but until the regulations changed, banks are limited. So I don't know, unfortunately, of any resources off the top of my head. I don't know if anyone else does, but that would be a recurring problem for you no matter what bank you go to, unfortunately. So I don't know what they're using now. It obviously has to be some sort of alternative financial institutions, but I can't speak to which ones.
Yeah, Craig, I'll just add to that it's really a function of anybody who's federally regulated is restricted. So, because the federal government has not yet approved it, so that's the issue. States are approving it, right? So we all know that it's on the come, but unfortunately, from a federal perspective, if you're federally regulated, you are restricted.
Thank you for that clarification. Hopefully, things will catch up with themselves over time.
Well, Sarah, I'd like to add something if you don't mind.
Please.
Although we really cannot counsel or help you with a cannabis business, especially because we're federal contractors, right? So we really can't help you with that. And in terms of banking, I would say to you to find aggressive credit unions that are now entering this market. Okay, look for them, and it'll be worth your while, I think, just my personal opinion.
Thank you. I had a question come in. I don't know if it's so much of a question as a request for information. With regards to building business credit from net 30 accounts for businesses that don't have any business credit. Would anybody like to jump in that might be able to provide some expansion on that topic? Again, we're talking about building business credit through net 30 accounts.
So,
Go ahead.
Henry, okay, yeah. So whenever you have accounts receivable, that's really the collateral for the line of credit. Now, depending on as you start out, sometimes the bank will look for you to be a little more established. So if you're starting out for that, there are other resources. There are micro grant programs. There's some organizations that do that to help out small businesses, especially startups. And you do need those accounts receivable, that net 30 terms, because if you're just getting cash up front, like you're not giving terms to customers, then there's nothing for us or the micro lenders, nothing to lend on, because really you should not have that cash flow issue because you're getting that cash as soon as you make the sale. So when you do have those accounts receivable, there are ways to do that. I would definitely have a bank account, because that shows and tracks the activity as well. I think it's important to have that and keep bank statements and keep good books and records, whether that's having an accountant do that or whether you have a QuickBooks or something like that, an accounting system, so you can show how you're doing it. And then you can work with one of the micro lenders often to try to see if you can get some sort of business line there. But that accounts receivable, those terms that you give, that is what typically, just so you're aware, it's there's something called a UCC filing on all business assets, and that's kind of how banks take that collateral. So we would have the ability to get paid and take over that account receivable in the event that we're not getting paid. So if you hear terms like that you're taking a first lien on all assets, that's what it is. And that really is typically your inventory and your accounts receivable. So I hope that answers your question, but I would definitely say there's some micro lenders out there that could help with businesses as you start up, and then as you grow, you eventually kind of graduate into banking, and the banking interest rates tend to be a little less expensive, and so it ends up working as you grow with them, and then you get to a point where you start with a bank that you'll know, a commercial bank.
You on mute.
Thank you so much, Craig, for expanding on that. Jose, there was a request for you to put your contact info in the chat, if you wouldn't mind, for our eager attendees. It's been great. We are coming down to 6 p.m. in just a few short moments, so I wanted to open this back up for any final questions, statements, comments, and of course, contact info from our wonderful panelists from this evening, just in case our attendees would like to get in touch to talk about their ongoing business financial questions and needs. That's great. Okay. Okay. I think we'll be good to wrap up then. Any final words from our panelists? How do we get that great offer from TD, Henry, to contact you directly?
Yeah, so at the time that the potential client looking forward to establish the banking relationship and have the conversation with me in reference to merchant services, at the time that the client get the service, it's right away automatic inputting to get the offer, which is 1% cash back for all the transactions that they do for the first 3 months of their relationship. And if they do 200,000 in a period of 6 months, they get $200 extra.
Excellent. And Devin, I saw you put a note that you'd like to work with Lehman in the chat. So it went to all of our hosts and panelists. So Jose, if you want to take a quick glance at that, make that connection going forward. All right, this is great. Thank you so much to everyone who participated today and contributed to this conversation. I'm glad we got to cover a lot of topics tonight. For everybody who is planning on joining on Thursday to talk about tax considerations for small businesses, that will be part 2 of this series co-hosted by the Chamber and BOEDC. We're going to be hearing from the Bronx tax man, John Serini, who's based in Throgs Neck, and also paralegals for the community. I'm going to put up a quick slide right now so that you can see the details for that. And I want to thank everybody again for joining us. Please take a look at what we're going to be talking about on Thursday. We hope you can join us, and please feel free to go ahead and share the link to sign up. Even if somebody didn't participate in today's webinar, they're more than welcome to join us for part 2. And the sign up link is bit.ly/BronxBiz series, and I'm going to put that in the chat quickly. So that you can share. Obviously, you all got here through this link. But if you'd like to share it again with anybody that might be interested in our tax conversation, then you can go ahead and share that with them, and they can sign up and take part in part 2. Yes, Troy, there is a recording, and we will be sharing it out within the week for this, so that you can replay if you'd like. All right. So thank you all so much. We're now at 6 o'clock, so I'm gonna wrap up here and say goodbye. And we hope to see everybody, or any new additions on Thursday for tax considerations for small business. Again, thank you so much, BOEDC, for co-hosting and sponsoring this series along with us. Thank you so much, Craig, Henry, and Rich from TD Bank. And thank you so much, Jose, for joining us from SBDC at Lehman. So wish you all a wonderful night. And of course, who could forget, happy holidays, and a hopefully healthy and prosperous new year to all of you from all of us. Thank you so much, everybody. Have a wonderful evening.
Good
Good night.
Thank you. Good night.
Good night.
Thank you, everyone.